Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, got some interesting things happening today again still. Let's come over to the charts. Man, I am, So, like, sometimes when I come in here and I start talking to you guys, they're like the first words that I've used today, you know, because nobody else is awake yet. And, oh my gosh, my voice is terrible. I'm sure that will clear up. All right, the charts. If I can find the volume profile here. There we go. Okay, so the Treasuries. Wow, that's actually a little bit more than I thought from you know what I was reading. So we have at long last cleared out the big downside that we saw after, you know, on the 29th. I can't even remember what that data point was or what it was that pushed us down, but we are now back up here. This is very curious. So yesterday there was some comments from Federal Reserve members and other things that kind of pushed the chances of a rate cut in December back up. And then overnight, the S&P 500 just, well, okay, so that's interesting. I thought that the S&P got really savaged here. So Nvidia is down, but apparently it didn't hurt the S&P that bad. Well, that's interesting. We didn't get any new data or anything, did we? Oh, well, we did get PPI, of course. Retail sales. Oh, boy. Oh, okay, hold on. Seth, you're like way behind. Ugh. US PPI. Well, no, let's start with retail sales. Retail sales 0.2 versus 0.4. Expected. Okay, so retail sales bad. Wouldn't say 0.2 is like a disaster, but that's bad. PPI month over month in line with expectations, spot 3 versus spot 3. Core PPI month over month, spot 1 versus spot 2. Okay, that would definitely push us up. So that's why so this move right here was kind of the job owning and so forth. This move right here is PPI. Gotcha. Oil down again this morning. Not really aware of any headlines or anything. Gold and silver up a little bit though. So it does seem that the market, that this is because the market thinks that Federal Reserve will cut in December, and they are piling into gold and silver because of it. Copper, ooh, okay. There's a little bit more clear of an uptrend in copper, so that's very curious. And what about the Japanese yen? Okay, yes, there we go. Yen is doing okay. We got a double bull formation. That's usually a good sign. Yeah, you don't want to make big conclusions from the chart, but I'm liking what I'm seeing here. All right, we need the yen to stabilize, because if the yen fell apart, that could be like super bad for the rest of the economy. And the Bitcoin, well, okay, but we're not seeing people pile into the Bitcoin, are we? That's curious. All right, so let's come back over here. So we should note that the big jump that we saw from the news, like we were already up, the news came out, we peaked, and then we have come back down to where we were at the start of the London session. So that, I think, provides us quite a bit of a room to work with today. Let's see where our levels are at. Well, I'm getting 502 again. And you know what that means? That means that it didn't work. It didn't work again. But shouldn't my futures be trying to roll over now at this point? They should definitely be trying to roll over now at this point. Ninja script output. I got nothing there. Well, that can't be right. Yeah. Oh, no. Oh, well. Oh, right. Because I never turned that off. Oh, so dumb. It's fine. This one. 503 is correct. Let's double check. Because I would maybe expect it to be a little bit larger than that. Big Toasty, how are you doing, Seth? Good. Oh, you know, I totally forgot to say hello, Apol, Big Toasty, and Uzi here all bright and early. And I'm sorry for being late, like, pretty much every day. I have no excuse today. Sometimes there's an excuse, right? But today, I think sometimes I'll be eating and I'll just, like, eat slower. Because I, lose track of myself. Okay, 503 is correct, but if we come in here and we refresh, we look at 503. Yes, sir. Okay. So, I'm not quite sure what to make of this, though. Like one of the things that I'm starting to realize with the whole, shall we say, volatility thing. Actually, I'm going to get rid of the other volatility indicator on here, okay? It's good, but I don't think it's good on that particular chart. So we're going to get rid of that. There we go. Okay. Anyways, I think one of the difficulties with it is that, what do you do if we're just smack dab in the middle of them, right? Let's see here. Do we have other stuff today? We do get house price indexes, consumer confidence. We're in the blackout period for the Federal Reserve, right? Let's see here. Next week. Monday, Tuesday, Wednesday. No. Man, next week is a busy schedule, though. Whew. The week after that. Yes, the week after that. Okay, so we won't be in the blackout period until Saturday. But I don't got any speakers on the docket today. Trump is pardoning the turkey today. That's a big deal. I don't want to be in the market when the volatility comes from Trump pardoning the turkey. I'm happy to announce that I'm working on my first DL model. Wait, what does DL mean? Fortunately for crypto because data is free. Oh, deep learning model. Oh, okay. So what deep learning framework are you going to use? I feel like that if we had a platform that was truly like AI native, that we probably could have done all sorts of insane, crazy things by now with it. Oh yeah, that's right. We're gonna do that. I totally forgot. I was gonna add somebody here to my GitHub. Let's see if it's all still working correctly. Nah. Mm. Okay. And that taken care of. Okay. All right, so Short Ray asks me, have you tried Jigsaw version 6? Was that recent? Let's see here. I don't see it. Wait, I thought that the beta was version 3, not version 6. We're skipping versions now? Oh, here we go. Version 6, 24th November. So yesterday. New rhythmic server access. I don't. Okay. Oh, that's right. I'm on version 4. I'm honestly really nervous to download and try it. I'm started with SkyKit and looking for PyTorch is the right answer. Cool. Like I was literally asking you that, expecting you to give me a Python framework and it not be PyTorch and me be like, well, you really should be using PyTorch. I don't know why that's just the one that everybody has kind of consolidated on. Okay, feature in focus intelligence dashboard. Peter has a video. Okay, hold on. I'm watching it. So they already had like a news widget, right? Yeah. There's a real-time news widget. Economic releases. But they've got something now that sounds like it's a little bit more curated. Like they've got somebody coming in and writing a synopsis and doing stuff. But he's showing me a web interface. Oh, that's interesting. But it sounds like that I can get it, grab it from, yeah. Okay. That I can grab it from Journalytics, and that is correct. I can. So let's look at it. Make that nice and big and wide. Today, 10-year Treasury. Treasury bonds saw modest gains overnight amid renewed bets on Federal Reserve rate cuts in December following dovish comments from officials, with yields dipping to one-month lows before stabilizing. Hey, it's just exactly what I said, huh? Correlated markets like equities rallied on tech gains and rate cut hopes, while safe haven demand appeared in some sentiment indicators. The most impactful recent news includes rising expectations for Fed easing, which could lower yields further, and upcoming data like retail sales and PPI that may influence inflation views, fostering a cautiously optimistic sentiment for bonds as a hedge against economic uncertainty. Session themes awaiting key releases, including retail sales and PPI for inflation insights, monitoring Fed rate cut probabilities amid recent dovish signals, trading strategy focus on news-driven trades around economic releases, entering long positions on weak data signals that boost rate cut odds, with tight stops to manage volatility. Scale out. Okay, well, that trading strategy I think is getting a little bit too specific, but you know, it's a good attempt and everything. Key risks: surprises in inflation or retail data that prompt hawkish Fed repricing, geopolitical headlines driving risk-off moves. Oh, did we get ADP employment data? I had missed that. Yes, we did. Weekly ADP employment change negative 13.5K. So, by the way, I wanted to talk about. I am getting like different kind of content on TikTok in particular, but I'm seeing it across the board as it pertains to the job market. And I've kind of noticed the change coming along a little slowly, and then today it was just like, you know, right there in my face. And I'm kind of hard to like pinpoint exactly what it is that I'm saying. But if I describe it this way, I think you'll know exactly what I mean. I'm starting to see content in the job market that very much reminds me of some of the content that I see about the dating market. Right? Like, I'm seeing people make videos using the words black pill and all of this sort of a thing. You know, talking about how companies have gotten an overinflated idea of their value, things like this. I think that there is a very real now at this point group of people, particularly young people who graduated from university and were unable to find a job, that are now starting to become very bitter about it. So, I hope that we are on the path to the job market improving. We definitely needed rate cuts. All the data that we've been getting shows we definitely needed the rate cuts that we got. Do we need a third rate cut? Well, if you asked me yesterday, I would have said, I think so, but I don't think that the Federal Reserve will do it. Now, all of the sudden, that has kind of shifted back to what I originally thought, if you asked me like a week ago, which is that the Federal Reserve is going to fight it, but ultimately the data is going to force them to cut again. So maybe we cut again. Hopefully 3 rate cuts is enough to relieve some of the problems that we're seeing in the jobs market. The problem is that you might not see it right away, right? They're hiring in the holiday season, I have found to be a little bit weak. Like, you get the seasonal hiring, but the kind of jobs that people are really looking for here, the white collar jobs, they tend to be less. And there might be some layoffs at the beginning of the year as well. But then after that, I'm hoping that we start to see an uptick in hiring. And then you get about 6 months away, and then we should be able to see the impact of rate cuts. So my hope is that that's the way that we're going. But, I mean, that's slow. Honestly, when you think all that through, that's slow. For somebody that has been out of work, I mean, I had a 6-month contract job in between, and I saved up so much during that I'm okay. So I'm probably not as stressed out as some people are, right? But for these people that are in a similar situation and have been out of work for a year, like another 6 months of this is too slow, right? And I'm starting to see it in their content. So, when I used the newest version of Jigsaw before, so yes, question mark, yes, what, December cut? Right, I mean, what we've seen in the past day really strongly suggests that the Treasury market thinks that something has shifted and that they will cut. So. Oh, did you implement a fix for the data scraping with expired content? Yes. Well, no, we did that during the stream. That works. That works. I have not implemented it on the dynamic one, and I need to also add a flag to turn on or off the caching. Oh, how do are you seeing it now? Did you have the issue today? So let's fix that one thing. I don't know why I'm not just immediately putting it in there, you know? Yeah, so on the Jigsaw thing, I am a little bit surprised that they are straight up making a call in there. They're straight up making a call in there. They're saying, like, probably you want to look for opportunities to go long. Which I think in this situation makes sense, but I don't know. I'm not expecting it to move too much at the moment, so I can let it sit. Yeah, I guess what I'm kind of trying to avoid here, Uzi, is just like having to send it to you a trillion times, right? Because so we could keep, I wanted to make sure that it worked again today. But it looks like it did, even though I had both indicators on there. I really should probably change the name of it too, don't you think? Like, let's just change the name of it. We're gonna change it from SPS. I gotta close it first. From cached projected range to SPS daily volatility levels. Enter. Yeah. Of course, it will cause compilation errors. Okay, SPS. Now I gotta change all the names. Daily volatility levels. Now, like, the implied volatility projected range is a terrible marketing name. I'm trying to come up with a name that is not so intimidating, and yeah. Okay. And then we need to have somewhere in here a save caching bit. Brushes, text. Where is the default? Oh, there it is right there. Default volatility factor. We'll put it right here. The Uzi range. That is what we should call. Oh man. Because you know what's his bucket? All of the other like people that are selling Ninja Trader indicators, and they don't like they make everything super like specific to them. Like they don't actually want you to know what it is, so they don't call it the 50-day SMA. They call it the golden path or things like that. And and calling it the Uzi range. This is totally in line with that kind of thing. Where the name just sounds good, but it doesn't really tell you specifically what it is. Oh, right here. If not save data, return. That way, if you put two of them on there, to avoid a race condition, they will both try and look it up, but only one will save it. You just turn on one of them and turn it off. Oh, by the way, I can. Should we work on the scaling as well, perhaps? Something I found useful is using the NT ruler tool to measure the standard deviation in ticks and look for moves throughout the day of those sizes. Oh, that's interesting. So we could change the scaling. I think that what I would want the scaling to do is to show the next line. But I think the issue that I have is like, if we are above the 0 point, do I only want to show the one above? Like in this situation, I think, well, let's see here. In the indicators, I think that I have a line in there that is the middle line, right? Yeah, open value, but I have it gray. And if I just make it seashell, you'll be able to see. No. Oh, maybe I need to do it on reg open value. Navy. Oh. Oh, that's interesting. Okay, so fix that too. It's not keeping the number. That's interesting. Open value and regular open value. Okay, so I do keep those. So I just need to okay, so it's correctly detecting the name of that is changed and removing it. At least I think it is. Daily volatility levels. Okay. Well, I'm not seeing the line, but it's might be because it's the gray color and I just can't see it. I thought I also, oh, I did. I thought I changed these to lines, but they're still dots. I must have only done it in the other one. Open value. Make it huge. Still an issue, I think. Now, that would maybe do it. Yeah, I wasn't even setting the open values in the data series. There we go. Okay. And then this open value. Oh, yeah, that's the one that I made super huge. Okay. Okay. Yeah. Fine. Good. Okay, so I'm thinking that what I should do is if we are above both the oh man, some of this logic is going to get super complicated because it depends on if you are before or during the regular session. But if we are during the regular session and we are above both the extended session and the regular session lines, but below these lines, then we should scale to show this first line. And if we're above these two lines, then we should scale to show the next two. And vice versa if we're below. And if we're in the middle of them, then I don't know. But then there's these situations where what if the regular open is like way down there? Then what do you do? Yeah, I don't know. Or I could just tell it to scale so that the next line, whatever that one is always shown. They've been using two instances of the open high low close indicator to display the open. That's actually really funny. Okay, I'm gonna change these all to all be lines by default. I just think that that's a little bit better for what we're doing. The having the plot style be a dot or a line can be useful if you're like really zoomed in. And this looks, I like my voice, because I've been kind of like vaguely sick for a while now. Asher's been sick for like a week and has like a huge swollen lymph node. And I remember hearing people saying things like, "Oh yeah, this disease is really bad." Oh, and we need to turn auto scale is auto scale false. It's just, you'll get this issue sometimes where, you know, you could be really close to the next line, but it doesn't really show it to you. And you have to scale it out to see it. Not entirely sure what I do about that. Okay, I see another issue. You have it on 20-minute chart, so a scale's fine for you? Yeah, that might be a one way to do it. Daily volatility levels. Okay. There we go. Oh, I don't think I like that. What did I do here? They're all aligned now. No, they're not. Oh. Actually, they are all lines, but some of them are dotted and some of them are dashed. That's funny. Make them all dots. Better. I feel like these two lines right here are not the same color. They look... I like to keep them on the high end to keep myself from being tempted. Oh, yeah. I don't remember who it was, but I came across a trading video influencer on TikTok from somebody that we know and I don't like, and I just don't remember which one it was. But he did say something that was really useful, which was, you know, like the thing that helped me was trading less. Yes. Yes, 1,000 times. That's not right. Oh, I missed one. I like double and triple checked it and I still missed it. That's funny. So like the default scaling of this chart here is no wait. Is it auto scaling for me here? Auto scale. Then it's a lot more, but if I turn it off. Oh, it's doing that because there was that huge spike. That's why. Okay. Okay, so I think the logic that I can use is, you know, find the high and the low of the current scaling, and then just adjust it to show the next nearest line. But if I did that, then it would probably want to scale it like this. Right, it would want to show that next one up there. I'm a little bit scared to do it because if I put that on there and then people don't like it, then that just makes it even worse, right? But because you can override the auto scale function. Oh, okay, so we got the S&P 500 going now. And it looks like they're starting out on the upside. They're getting to that 67.25, so we're getting back to where CTAs maybe stop their selling. That would be a good thing for the market. I'm surprised. I really thought that the S&P was down big overnight from what I read because NVIDIA was down from Google and Facebook announcing a partnership that would use Google's GPUs. But apparently, no big deal. Now that you got the open values in there, you can see it bouncing between those pretty hard, don't you? Okay, let's see here. I'll close some tabs that we got open now that we've done all of that. I think I will wait to install Jigsaw till after the stream. Let's see here. Cassandra Unchained and NVIDIA emailed a memo to Wall Street sell-side analysts to push back on my arguments. I stand by my analysis. Obviously, the full analysis does not fit in a tweet. I will release it on my timeline. The first post in The Heretic's Guide to AI Stars Supply-Side Gluttony is up now. It's a highly light read. The second in the Heretic series will be a heavier lift. Every post of mine will have a follow-up Q&A with 5 selected questions from the comments section on the post. Okay, but what do you guys think of Michael Berry's new Substack? So I didn't look into it too hard. I read like the first post. The first post, there was a couple of things in there that I was a little surprised to see. He was basically like, you know, managing money is too much stress and I don't really like it. But I do like doing the analysis. And I really hate that I can't manage the money and then, like, I'm limited on what I can say. So he decided he's just not going to manage money anymore and just post the Substack. Which, okay. But then the Substack is like $40 a month. So I'm still conflicted there because it's like I do want to read what he has to say, but I don't feel like that it would provide enough value to me to be worth $40 a month. And there are some really interesting, shall we say, like, there are some things about his analysis that I think are really smart, and there are some things about his analysis that I think are just like completely dead wrong. Like, he was kind of saying they are essentially committing fraud by not putting the depreciation on their assets correctly. The assets that they have will depreciate more quickly, and that's not showing that. That's wrong. They are actually using the servers for 8 years, not 5. Things like that, right? So like there are some things about his analysis that are like just dead wrong. But I do think in general, like the idea, and I don't like to use the word bubble, but I do think the idea that the AI space was I don't know what if it is anymore since we've had this decline. But I think that the AI space was set up for a significant decline. Whether we had that significant decline or not remains to be seen. You know? So it's like, you know, I wouldn't just trust his analysis, but he's still somebody that I would like to read. But is it like, you know, just having somebody that I would like to read, are those all worth $40? I don't feel like it is. Like, you know, if every person that I would like to hear from, including myself, we're charging $40 for a Substack, well, that all adds up very quickly, doesn't it? I guess, I mean, it's not like there's anything wrong with what he did. I guess I'm just disappointed that it was that expensive. So, and he's going to be a trading coach? Oh, probably not, but who knows? It's funny. I have basically come to the point where, like, you know, when people ask me about YouTube and like, oh, you have a YouTube channel, what do you do? I've come to, it's just a channel where I talk about why you shouldn't day trade and then day trade. Like, that is basically what we've become, hasn't it? I'm constantly telling you all the reasons why you probably shouldn't day trade, and then I do it anyways. So let's see here. I will give Uzi the updated version here. I think we should do that. And then this way, because I changed the name of it, you know, there's something wrong with it, you can fall back to the other one. Yeah, no problem. There we go. It's there in chat or in Discord private message. Here's a post on LinkedIn with somebody complaining about how Bitcoin gets taxed, so you can't use it as a medium of exchange. Yeah, that is a problem. But that's not like anybody can really use it as a medium of exchange with the way that they crippled the blockchain anyways. Yeah, I didn't get the email that they released a new version of Jigsaw. I got the this is what we've been building. Oh no, wait, I do. It is that one. I mean, honestly, they are, maybe Jigsaw is kind of having the same thoughts that I am, like realizing that order flow is essential to be able to see what's going on, but is not necessarily the best source for edge because the edges there are super short time frame. So really, if I'm making a tool that's going to help people trade better, I have to include things about fundamentals essentially. I don't like to use the word fundamentals because there's a lot of things in there that are involved that aren't necessarily strictly the traditional definition of technicals or fundamentals, but you know, giving people that tool that kind of helps them at least develop that edge, like, because I think part of it is watching it over time and understanding how the market reacts to that stuff. But you know, so that is the right tool. But I really wish that Jigsaw had a market analyzer. That's what I really wish it had, a market analyzer. I really wish that it had spread charts. And if it had those two things, maybe I would start using it completely. But whatever. Well, that's interesting. Okay, so another thing that happened in the past day that we haven't talked about is that Donald Trump has released an executive order related to AI stuff. And basically, it sounded to me like they were basically instructing the department who I forget who it was, but basically to shift all of their compute stuff towards developing AI models, so that like there is a public LLM essentially. But this person is pointing out that it also gives the US AI companies access to their data, which is like petabytes of proprietary data. So that will probably help the training. Watch, they're going to give there's going to be data in there that like wasn't properly filtered and whatnot. And then the LLMs are going to know all of the government secrets and start telling it to us. That would be funny. That would be so hilarious. Oh man. That's just such a fever dream scenario now, the more that I think about it. Oh no, arrest for Linux kernel co-maintainer formally steps down. Dude, look at this picture here of the poly market odds for whether there will be a rate cut in December. And they were saying yes, and then there was the Federal Reserve meeting. Was it the here where we had the Federal Reserve meeting, I think? And then that more recent slew of data, and now it, it like kind of went backwards, and now in the past day it switched back up, and it's like almost really high probability that they will cut. It has been a real roller coaster. And like the thing that's been so weird about it is that the longer end of the curve hasn't been as responsive on this particular cut. So like you're seeing these really huge shifts in the market, and it kind of feels to us watching it on the front lines like everything is just kind of like no big deal, you know? A memory leak is a social construct. What? Okay. Half of you guys listening to me probably don't even know what that means. So you can look it up. Let's see here. So I did notice that the Treasuries kind of bounced off of the extended session open and had a pretty decent move up. But, I had kind of missed it, and I wasn't expecting it to do anything. But now I'm realizing that the S&P 500 has taken a more extended dive here. Actually, the NASDAQ is down 1.28%. So let's clear our numbers on the upside here. Does this have legs to it? Well, we are getting into like single print areas where there is a volume on all these levels from the PPI news, but it's a very, very little volume. So it's kind of interesting. It's been long enough that the liquidity should have recovered. Is there something else going on? Wait, was it? So, what I'm dealing with now is, originally I kind of thought, well, I don't need to worry about it too much right now. The S&P started falling apart. Now I'm interested in it. I don't have as much context about what's going on. I am really troubled by this low liquidity up here. Like, there's some 1700s there and so forth. Was it always like that? Let's see here. If I open this chart up, will it show me? Perhaps. Looks like maybe. Yeah. Just change the interval like really, really big and make the interval width really, really small, and so we can see more here. Oh yeah, and then undock it so that I can kind of see. Oh, okay. So after that big initial news spike, that liquidity just kind of hightailed it out of here. And it's still like that. Okay, that's interesting. But still a few ticks away, and maybe if we move up to there, that liquidity will, it's right there, like the 32 at 20 will just continue to roll up. Okay, now the SPOOs, they did take a bit of a tumble, but they are making a push to try and recover. I was hired as a senior back-end engineer, but on my first day, I found out I'm actually just really highly paid technical support. I quit by lunch. Holy, what? Why would you pay somebody a back-end developer salary to be tech support? I went through 5 rounds of interviews for this role. 5. I did a system design round, 2 leak code hard rounds, and a behavioral interview where they emphasized innovation and building scalable architecture. The salary was great and the tech stack was listed as Golang and AWS. I show up on Monday for onboarding. I get my laptop, log in, and meet the team lead. He hands me a headset. I ask what this is. What is this for? He looks at me confused and said, for the client calls. We're a little backed up on tickets right now, so for the first 6 to 12 months, you'll be handling tier 3 support tickets to learn the product. Okay, that's not quite as bad as what I was expecting, but that's still pretty crazy. I asked about the architecture work. He laughed and said, oh, we don't touch the core code. That's handled by the offshore team. We just patch the fires they start. Ugh. I didn't even go to the welcome lunch. I walked to HR, handed them back the laptop and the headset, and told them the role was materially different than what was described in the contract. The vice president of engineering actually called me while I was driving home to scream at me for wasting their resources. That that just sounds like massive incompetence on the part of that organization. That's insane. Why even take the call? Well, like, can you really, like, think about what must they be thinking? You put somebody through this really arduous interview process to find somebody that's extremely technically competent, and then you're not going to use them to write code or anything like that. You're going to have them fix the code that the people overseas are doing and do tech support. Like, that makes zero sense at all. You don't need to pay somebody that much to do that kind of stuff. So why would they hire somebody at such a level? Like, there's just something majorly wrong going on in that organization. 5 rounds of leak code to earn the privilege of wearing a headset and fixing bugs made by an offshore team. The dream. Should have asked for a signing bonus in the form of noise canceling headphones. You might be right. Like maybe it wouldn't have been so bad. Like, maybe that would have been an easy, like, a cushy job. But I think that if it was me, I would still be, you know, like I care more about leveling up and continuing to improve in my career and things like that. I wouldn't want just the cushy job. But a lot of people would probably just keep it. I remember I got a job as a software engineer on the first day. Some dude I never met in the interviews takes me out on a field assignment and tells me, "You won't do any of that here." It was 6 months of hell. I ended up suing them for a back injury. $20K was a nice bonus. Then I was put on a desk job and actually did software engineering. Nah, fake story. Yeah, there is something about this story that seems like nonsensical to me, but you know, I often make the mistake of reading something on Reddit and not immediately going like, I bet you they're lying, because that really should be like your first thought, right? Okay, so the treasuries here, kind of interesting. The S&P 500 stopped moving down. Okay. So it seems, oh, you're right. That's what it is, IQs. I'm so stupid. Guys, why didn't you say something when I was all ranting about this? I should be rolled over. And my platform is not telling me to roll over because the rollover dates in NinjaTrader is, in the version of NinjaTrader that I have, is kind of screwed up. But I should know better on my full contracts here that I should be on H. Or sorry, is it H? ZB H26, yes. That's why the liquidity looks all messed up. Probably now you're going to be like, no, I was saying something, Seth, and you just didn't read my message. I didn't look at you. Don't I feel the... I never said I was good or smart or nothing. Oh my gosh, guys. That's I'm embarrassed, honestly. I'm embarrassed, honestly. It's just the kind of, like, it's a classic Seth mistake here, too. Because, like, I came in at the beginning and said, like, well, we should be rolling over. And it didn't occur to me to roll over my DOMs. Like, what? Okay, but anyways, it's curious to me that even though the S&P 500 has seemingly recovered, that the treasuries or not moving back down to the low end of the range. They're just staying there. So what about ZT? Sorry, the micro 2-year. ZT we should switch to ZTH 26. But the micro treasuries, well, it looks like maybe even those might be rolling. Nah, they're just being weird. Why is there a 10-tick gap there? 10-tick spread in the micro 10-year. Well, let's try it. ZYZ 25 or 10YZ 25. I'm not getting anything yet. I'll give it a second because sometimes it just requires, somebody to made a change for it to recenter. Okay, so the liquidity is not as good, but it's actually kind of pretty similar to the current contract, so that's kind of weird. I'll change it back to November for the end of the month until the true end of the month. Okay, so we also did just get some news, right? We had the home sales, right? Pending home sales changed 1.9% versus expected spot 2% and a previous reading of 0. So Richmond Fed Composite Index was worse than expected at -15. And USCB consumer confidence was 88.7. So that all sounds very dovish to me. That all sounds very dovish. Oh, okay. So I missed something else major. Ukraine tentatively agrees to Trump-backed peace plan, sending oil sliding. Is that why oil is falling apart, huh? Ah. Wait, so when this happened... It's over here. Ah. Oh, okay, that's interesting. My voice. I sound like probably sounded like a 14-year-old kid there. No, it looks to me like actually this move right here, I originally thought, oh, maybe it was just front running for the PPI news, but actually it looks like based on the correlations, to come here and zoom it out and everything. When I put my mouse over this big drop in oil, you kind of see it so that rise in the treasuries is actually maybe reflecting a drop in the price of oil because of Ukraine. Very, very interesting. And I feel really, again, embarrassed that I missed that headline when it came through. but I don't think that one necessarily came over on the news squawk. For the 56th time this year, the news is about it stopping. Maybe it will this time. Well, I'm actually really surprised. I'm really surprised. I thought that Ukraine would fight and negotiate this harder. I would say, like, it really seems to me that Ukraine is in an awful situation. Like, I still don't think that Russia could just, you know, storm the whole country and take it over. But would Russia eventually grind and take over the oblasts that, you know, they are trying to? Probably eventually they do. And, you know, even though I wouldn't say that, like, they could completely take over Ukraine, like, Ukraine is definitely losing this war and cannot win it, right? So it totally makes sense for Ukraine to, you know, take a peace deal and stem the damage. I don't know, man. But there was still some things in there about it that kind of made me think, I don't know. Also, I'll have to wonder, because there was like a big corruption scandal in Ukraine that really, really hurt their support among the Ukrainian people. So you also have to wonder if that is playing a factor as well. They should have capitulated in 2022. Well, would they have gotten a better deal in 2022? Well, yeah, I would have saved some lives, but, like, would there have been less territory taken away? Would they have gotten better terms? I don't know. I don't know, man. Because honestly, I think that the larger argument that Zelensky is trying to make here is a serious one, which is that the nationalists in Russia believe that they have to control all of these key geographic areas in order to protect the fatherland or the motherland or whatever they call it. And those spots are basically like, you know, if you come in and see it, I have to pull up a map. This area that Russia thinks it needs to control is like this and like this, right? And so that basically means that okay, so they've taken over like this, right? Isn't that what it is, right? They will almost certainly kind of take the opportunity to try and recover themselves so that later they can move all the way over to this. Totally. Now, I think from what I've read about the peace deal, that it should be enough to be like, Russia would have to be really, really stupid to continue pushing from that point. Right? Russia would have to be really stupid to 10 years from now decide to take over the rest of Ukraine. That's the hope. But, you know, is what's in the peace deal gonna give Zelensky in particular confidence that it's safe? And I've kind of been like skeptical about it. And you know, everything that I was hearing was, you know, the Europeans saying this is a complete non-starter and all that sort of stuff. So for the headline to be that they've agreed in principle is okay. Well, let's read the Zero Hedge story about it, and maybe it will give us some insight into where this headline is coming from and how serious to take. A U.S. official privy to negotiations, okay, so that's probably Marco Rubio, is claiming major progress Tuesday, telling ABC News the Ukrainian delegation has agreed to the United States' potential peace plan at a moment it's still being hotly debated, especially among the Europeans. The Ukrainians have agreed to the peace deal, the U.S. official said, but without specifying much in the way of details. There are some minor details to be sorted out, but they have agreed to a peace deal. Who's a piano player? I don't get that reference. Of course, the proverbial devil is in the details along with each side's red lines, and so this claim should be taken with caution at this still very early point. Trump has set a deadline of Thursday or Thanksgiving Day in America for the warring sides to reach a deal. This suggests the talks are moving along with intensity and a sense of urgency. Well, can you imagine oil, though? Do we have a daily chart in oil here? Yeah, we do. Okay. Oh, man, our daily chart in oil doesn't go back nearly far enough, though. What is that, 2 years? Man, I tell you what. It used to be, oh, I want to look at a chart, and I can include 2 years on the chart, and that's plenty, you know? And then it was just, oh, wait, well, we just need to make sure that it still shows 2020, right? But the past 5 years has gone by so quickly. That's 1,000 days? 3,000 days. There we go. Okay, so oil was kind of getting pricey. It was getting into the $70 range, and we thought, oh, maybe we could see a $100 barrel of oil by X point. And then the Ukraine war happened, and it was like, okay, well. But could oil move down into this range again? Can you imagine sub $50 a barrel oil? Well, that would certainly help the inflation thing, to some extent at least. Wouldn't be perfect, but it would help a little bit. On the other hand, well, oh wait, what did I just do? Oops. Don't worry about it. Pushed a button that accidentally changed the scene. On one hand, I kind of feel like that maybe the market's overreacting to that headline, that it's not a done deal, but then again, there's only like 2 days left till Thanksgiving, right? Thursday. So if they were going to agree to it or not agree to it, you would kind of find out. But it's probably still in the, like, they've agreed in principle, like, yes, we do want to make a deal, but we're not giving up any territory. And then that's like the end of it, right? Like, who knows? So that one could flip. So I don't think, like, if I had made money in oil and, you know, going short, I don't think that I would be sitting here being like, okay, let's hold that short for it to continue going even further when the deal is finished, and then it will just continue to be momentum and yada 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 yada. Maybe if it was a swing trade, maybe I'd do that. But for a day, I wouldn't be trying to turn my day trade into a swing trade because that headline could reverse very easily, and then you'd just be screwed. And you could probably wait to be like, wait until the deal is done, and then maybe then go into oil. Although at that point, then won't the OPEC say, okay, we're reducing oil output? I don't know. Although is OPEC, as I've noticed in the past, how long would I have to, how far back would I have to go? Certainly, since the Ukraine war started, OPEC has become less powerful. It used to be that like what OPEC was going to do was a major headline that we really had to keep track of and watch and everything. And now it moves the markets, but it's not nearly as dominant. It's not nearly as dominant as it used to be. Like, I think that the U.S. has just been putting out so much oil now that it's starting to make OPEC less relevant. Certainly not irrelevant, but maybe slightly less relevant. And there are a few delicate but not insurmountable details that must be sorted out, which will require further talks between Ukraine, Russia, and the U.S. Oh, I found some... Man, I need to... I think I need to make a robot that uses a large language model to process the messages of users on the Discord that do not have regulars permissions, and recommend administration actions. Okay. So thinking about this Russia thing too, by the way, because people in Russia and Ukraine used to be pretty, like, we had a lot of viewers from there. Used to be active, and then everything kind of got screwed up, right? But I got to this morning on TikTok. I got a person on my front YouTube page claiming to be my emotional support Russian. And it was pretty funny. So maybe the internet with more Russians might be interesting. Burlington Coat Factory shares slide after store traffic fell off significantly. Okay, let's read about the ADP. That was something we missed. ADP reports that private employers shed an average of 13,500 jobs a week, considerably worse than the last couple of weeks. That is the worst monthly average since August. Consumer strength remains in question as we enter the holiday hiring season, says Nela Richardson of ADP, adding that might be playing into delayed or curtailed job creation. This is certainly not good news, but it does shift the dove/hawk argument of the Fed to pro-cut side, and we see the odds rise for December. Is this bad news good enough to support the Santa Claus rally? Find out next time. Obama started the BS in Ukraine. I really hate that line of argument. You know, like, because when you say it that way, it's like you're saying, well, Obama did this thing and you knew it was going to happen, and really ultimately he wanted to have a war in Ukraine and just didn't care what was going to happen. And I don't think that that is really an accurate assessment of the situation, right? There was definitely some moves in Ukraine by the US government. I don't think that they ever dreamed in a million years that it was going to lead to Russia just straight up invading Ukraine. you know, like really everybody, like when it happened, we were all like, what? This is crazy. They're crazy. There's no way. Like, why would they do that? It was just, I still think about it. It still just seems so shocking to me that they were willing to go that far. Like, honestly, I do wonder, okay, so if we just assume that the Ukrainian war is over here, how much damage has been done to Russia? Because, yeah, like, their economy, they kept it going. They're kind of self-sufficient. But I still would say that irreparable damage to the country of Russia has been done. Like, so many people died in particular that's going to have, like, really disastrous impacts on their demographics, right? How are they going to, like, 50 years from now, how are they going to keep their infrastructure running? That sort of thing, right? And that's kind of some of the reasons why we thought that Russia would be just really dumb to do it. But I think that ultimately these people in charge over there are much more ideological than we realized. And, you know? Ukraine doesn't seem to have much. Are you saying that all of those areas are mostly just farmland and that they don't have any more farmland in the rest of the country? Because I don't think that's accurate. But I don't really know the full geography. Like, the oblasts that they're taking are like, did they take this one? I think maybe it was like this, right? And then there's this thing, right? And you're telling me there's not any farmland in any of this? Well, they don't have much in the way of ports now. That hurts. No, I am kind of meaning their farmland is damaged, a lot of it, and I'm meaning the farming is the background. Oh yeah, it's totally true. Well, I mean, I'm just talking about Russia. Ukraine is absolutely totally screwed. But but there will be rebuilding. This is the part I'm a little excited for it, to be honest with you. I'm a little excited. I've always read about the rebuilding, like the Marshall Plan and all of that happened in Germany. And it all just sounds to me like the most amazing, fantastical thing. And, you know, I didn't see it. And I kind of thought, oh, that'll never happen again. But we're going to see that in Ukraine. I'm a little vague on the details, but like my recollection is that there was like trillions of dollars or something that had been seized, you know, that was locked up, that they're basically going to say will now be turned over and used to rebuild Ukraine. Right? And then probably all of the money that the United States and Europe has been pouring into Ukraine for the war can go into economic development. It's going to be amazing. I would love to go to Ukraine and be a part of that. Unfortunately, I don't think that I have any skills or connections that would make me useful and put me in that place. But it all just sounds... That's something that gets me going. Is the same with Palestine? You remember when we were getting the deal with Palestine, and I was kind of saying similar things like, are they gonna, you know, they're gonna rebuild the entire Gaza Strip, and what that is that gonna be like? And that's gonna be interesting to watch, you know. But the Ukrainian demographics permanently harmed. Probably, you know, I bet you that a year from now, like a popular thing that you're going to see, well, let's not say a popular thing, but something that you will see people like discussing on the internet is people, Westerners, moving to Ukraine and Russia to find wives. I bet you that's going to be a thing. Do you have iceberg detection indicator that you use, and do you think detecting them gives some edge? So I do not view icebergs on my charts, but I will see them on the DOM because you can kind of see it as it trades. They'll trade into it, and you'll see that basically you're seeing volume trade, but the bid or the offer doesn't change. And I think what you actually will find, if you really watch that, is there are way more icebergs out there than your chart indicators tend to show you, because those only show the really big ones. But more broadly, there is this idea that large icebergs are indicative of institutional activity. And I believe that to be false. I don't think that there is necessarily, like, to some extent, it's kind of a little bit of a vague assertion. Like, how do you prove that particular thing? Well, of course, all icebergs are put out by institutions, but I think the idea is you look at the icebergs, that's predictive of which way it goes. And I think that if you were to test that, you would find that actually it's not. And really, when you think about, how icebergs work and why you would potentially want to use them, I think it totally makes sense why they wouldn't be that indicative of the future price movement. Because that's somebody that wants to execute a large order, but wants that particular price, right? So those guys are much, much more likely to be passive players that are just hedging and that sort of a thing. All right. So those guys don't predict where things go. Like, the thing that really will move stuff is market orders just coming in and overwhelming everything, right? That's when things really move. The periods where we do the best are going to be ones where there's just a persistent imbalance and it just keeps trending in one direction. And icebergs don't really tell you that. What icebergs do is they can provide an advantageous location to enter a position, right? You know that if you put an order there, you're like much more likely to get filled. Okay, so icebergs can kind of help you in that respect. So that's why it's really useful on the DOM to keep an eye out for the icebergs and keep track of them. But I don't know if it really makes that much sense to print them on your chart. But each to their own. I personally haven't found it useful. So I'd move to Russia, but no, we're enemies. Well, I don't know what that means, but I would maybe go on vacation to Russia. I don't know. I'm honestly a little disturbed by the shift in Russia. You know, like I remember, what was this music group? Do you remember this whole thing? There was these two girls that were like a popular music group in Russia, right? It was like Pussy Riot or something stupid like that. And, you know, at first they were just, you know, Western media was always talking about them and they were just kind of causing political, you know, just kind of the same thing that happens here. And then all of a sudden it was like they were completely silencing them, right? And then it was like, oh, they're silencing other dissidents, like basically anybody that was talking out against them just mysteriously has legal charges taken against them. And then all of a sudden it was like Russia is completely disconnected from the West. So if the Ukraine war is over, is that going to shift back? I don't know. It's kind of a weird thing, though. Just to see a country that we had a relatively decent amount of interactions with, just like completely remove itself from the internet, you know? There is an indicator on Ninja Turtle that detects big volume. Yeah, there is. There is a good, well, in the order flow suite, big, bold, beautiful indicator. Yeah. So, I tell you, so I'm making a video about this. Well, so I have a video. I think I have like a complete script, but I'm still trying to optimize this. So I think that I will probably take another whack at it, perhaps tomorrow, so that I can record it on like Friday. And that one is really going to be like the same video that I've made a trillion times, where I basically try to convince everybody that the market is statistically efficient and not informationally efficient, and why that's such a big deal. But this time I think that I've really got a better way of selling it. Okay. Like I've kind of understood better the things that people associate with, and, you know, things about storytelling and all of this that I think could make the video more engaging. And then I want to make some videos about order flow. Now, I started out with it being like, here are all of the problems with order flow, which isn't to say, oh, I use order flow too, but I just see a lot of things that people share that is trash. There is a lot of junk education in the order flow space now. Okay. Well, I know that when I do that, when I say, oh, here's the problem with this, like those videos don't work very well, because anybody that's like, likes order flow, which is the people that we want to watch the video, they won't want to watch that. They'll immediately be turned off, right? So I really have to present it as like, you know, people miss this one thing about footprint charts, right? That way, if it's like, oh, if I'm using a footprint chart, I really better know this, so I better go watch that video. So I kind of had to split things up. So I don't know how many of those I will make, but I think I could make a bunch of videos about this, and I want to, because it does seem like order flow is like starting to become a trending topic. And one of the ones that I want to make is about footprint charts. And so footprint charts, what's the issue with footprint charts? Well, when you look at the literature on order flow, and the things that we can like actually prove about order flow, that would help you, of course. I think there's kind of two things that I see. There's two levels. There is the very, very short time frame. So order flow, and in particular, like taking level 2 data and passing it to a neural network of some sort. They are able to find extremely effective short-term signals. But we're talking about like sub-second interval trades, right? And then there is like the mesosphere level. So at the mesosphere level, we see interesting aberrations in the order flow because of the presence of meta orders. Right? If there's an imbalance between market buy and market sell, somebody's executing a large meta order, those meta orders have a tendency to continue like all day. So you can come back even an hour from now and there will still be that imbalance. It might not necessarily lead to a rise in price because there's other things involved, but you have the order flow in your favor. That's a really good sign, right? Okay. So there's the very, very short time frame and there's the mesosphere level. And the thing that we want to see on the mesosphere level is a persistent imbalance between market buys and market sells. So to see that behavior on the mesosphere level, you really want to be looking at cumulative delta. That's where you're going to see it. Because if you're just looking at it as an imbalance at a specific place, like the people that are executing those meta orders, they're going to execute it across a range of prices and over a really large range of time. So basically, what happens is the two places where we know that there is really solid edge to be had in looking at order flow data, footprint charts don't show very well. Unless you're doing like a sub 1 second footprint chart, which doesn't make a whole lot of sense. And then again, on the mesosphere level, you want to be looking at cumulative delta, and the footprint charts don't really show you that very well. Right? So, but I wanted to get into that for your benefit, Truth Addict, because that kind of gets into the things that we actually really know about order flow. Because beyond that, everything that you hear beyond that is really just, well, we have some data, let's see if we can use that to sort some sort of an edge. And then retail traders will tend to take the kinds of tools and setups that they're familiar with, like technical analysis, higher highs and higher lows, this number is bigger than this number, and try to create setups out of those. But they tends to be naive and nonsensical. Like, what would be the thing that would cause that to happen and cause it to be a consistent edge that's persistent and all of that sort of stuff? They don't actually make sense. So all of those things you kind of have to take with a grain of salt. And I just brought that up because the icebergs is probably the best example of that sort of a thing. Is this like, okay, so there's icebergs, so you can see them. Okay, so now what do we do with it? Well, and I say you can use it to optimize your execution if you want to execute in that area, but I don't think that it really tells you very good if we're going to be moving up or down in the next 30 minutes. The footprint plus the map is better than book map. Well, the book map is another one that I want to make a video about, right? Which is that it focuses all of your attention on the presence of really large resting orders, and those tend to be a poor predictor of where we're going. So people take a way overly simplified approach to that. So I need to, when I make these videos, I need to be really careful, right? Like, I'm going to have to tread a fine line of basically, like, not outright calling the way that they're trying to trade bullshit, but basically explaining to them why it doesn't really work and what they need to look at instead. And then after we do those videos, then I don't know what we do, to be honest with you. I still kind of feel like really, what would be the words to describe how I feel about this? I'm just, I feel it's really important to talk about complexity. Like all of the major problems that we have right now have some level of complexity science involved with them. And you know, there's this whole thing, like I just kind of I guess I was watching a YouTube video about it, and it was kind of talking about something in complexity that wasn't really discussed as much in the other things, and that is irreducibility. Like, there are some things, at least with our current understanding, that you can't just turn into a simple equation that allows you to calculate the value of something, right? Like, you can use force equals mass times acceleration to say X minutes from now, where is this thing going to be, right? But there are some systems out there where you can't do that, that you have to go step by step, and to see what it's going to be 1,000 steps from now, you have to do 1,000 calculations. So you can't reduce the problem down. And that is so many of our problems. And what happens is we as humans, we aren't able to deal with complexity. Like, there's a limited number of things that our brains can see and comprehend at the same time. So we can't look at a big system like that and play it out in our heads and see like how it's going to turn out. We have to use computers to do those sorts of things. But that's not going to stop us from trying. And so what happens is, when we're presented with complexity, we seem to be blind to it. We don't realize that it's complexity and that it's beyond our understanding, and we need to use these other tools. We just try and wing it. And so we've got to teach people that, like, what is complexity? What are the kinds of problems that we're talking about? And what are the tools that you need to use so that when those situations come along and we say, oh, well, okay, what if we do this in the economy? Or what if we change this rule? They don't just say, oh, well, I'm super smart to figure out how I can change the rules and how things will go from it. They'll go, no, actually, we need to simulate this with agent-based modeling. And I feel like that is a very important message to get out, and I just don't know how I can help with that effort. You know? That's probably what we would do our videos after. Because we will see in the month of December how many of those order flow videos I end up making. Well, we got 15 minutes left. The treasuries are still right where they are. or right where they were. They've been stuck in this range for 45 minutes. So that's kind of interesting. This was a day where there was definitely some opportunity, but I didn't see it, and I wasn't expecting some opportunity, and so in the end, maybe there really wasn't opportunity, but it did move. It did move. So, and hey, the S&P 500, it looks like they're pushing highs now, so maybe they overcame the downside. Canadian October trade data won't be released on the 4th of December. StatScan reviewing trade data release dates after U.S. shutdown. Oh, okay. Successful traders, do you feel this sense of sadness and emptiness once you finally become successful consistently, like what's next kind of feeling? That's not how I think you should feel. It's like so much worse, actually. So like, I think there's definitely this thing where like, if you're really, really chasing after something and then you accomplish it and you don't have anything more in your life, then you lose your sense of purpose. And this is what happens to a lot of successful people, especially like the billionaires, is like the insane amounts of money doesn't actually make them happier. And you're maybe actually happier being in the struggle and never completely quite making it, right? But with trading, I really think that if you really have truly become a consistently successful day trader, which is to say, like, you've been doing this for 5 years and you've made money all 5 years, which I don't know if there's anybody that does that. There's a lot of people that think that they're profitable traders, but I think that the level is 5 years. I think that to get to that 5 years, that requires a certain level of understanding of the market. And that level of understanding comes with some interesting realizations about the world. You know what I mean? Like, we come in and we look at all of this data, like volume profile. And we see that the volume profile follows kind of a statistical Gaussian distribution with a point of control. And that point of control where the most value was, where the most volume traded. And we think, well, that means volume. Or sorry, that means value. That means value. There's something important about that price, right? And your mind is attaching to it something of significance, right? Here is now within the cosmic properties of the universe have all distilled down into this one particular statistical anomaly in the markets that I'm able to see and make money, and now it makes everything make sense and fit within this greater whole, right? When you develop a correct understanding of the market, you kind of realize that a lot of these things just kind of happen randomly. There's no real significance to them in terms of like what is the correct agreed upon price whatsoever. What the market is doing is just liquidity and transactions, and that's it. It kind of destroys a lot of the illusions that you have about the market. And so, like, the truth to the market is way less interesting than the fantastical puzzle that we have in our heads that we're trying to solve. You know? And it has implications on the economy too, because we've attached all of this meaning to the economy and what we're doing and, you know, how we're making money and all of these sorts of things. Because really what happens is you want to find meaning in your work. And this is like an evolutionary adaptation that we've given so that people will find a place in their community to contribute. Right? And when you realize that, you know, like the market is not perfectly efficient, like you're not always going to be rewarded for working the hardest or having the best idea or providing the most value to people. Those are all admirable things, but that's not necessarily directly related to how you get rewarded, right? There's very much this existential dread kind of thing that comes along. Like, if that's really what it all is, then what even is the point? Like, what really is even the point of trying of all of these things? Well, I think you can make your own. I think you can make your own meaning still. I think ultimately, like, existentialism is correct. Like, that's what you have to do is like you're gonna come into this existential crisis and then you find the meaning yourself, right? That's what you should feel if you really truly understand the markets. That's the issue you should be dealing with. And at the end of that, I wouldn't call it sadness or emptiness. Yeah, hit like and scroll. Oh man, well, yeah, you guys got to remind me about this early on. We gotta get them likes up, huh? Liquidity on ES is different. Oh, okay, somebody answered that question for you. Yeah, well, the S&P 500 is not as thick as it used to be, that's for sure. Because I can remember when I first started trading, there was like 600 contracts per tick, right? I kind of wonder, like, why doesn't the S&P 500 do a reverse split? But your ES, why is it showing MES experimental blah blah? Oh, okay, so at the very top, MES Z25 is the instrument that you would be submitting orders to, but you can see in parentheses there it says data ES Z25. So the data that you're seeing is for the main ES, but if I were to submit orders, it would submit them on MES. Is what it is. It's if you come into this thing where you select things, right? You can do cross instrument bound, use this instrument in trading. I have that checked. Okay, so that's what that means. The experiment blah 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 is basically there's a little wild card thing so that you can hide the account number. So this is just when you see experiment, that just means, which by the way, over here in ZN, if I were to place a trade, I wouldn't want it to be on experiment. I would want it to be on Sirius or on the actual account. If you see it starts with 7, then that would be live trading, right? Even over here, I don't have it armed. I'm hoping though, in January they will be taking more live trades. We'll see. Just because Well, you know, I think things are still tight, but just it'll be the beginning of the year, so we would have more directionality, and we tend to get better trades then, right? So then we'll be pulling that out more often. Yeah. I try to do it like when I'm doing the stuff where I feel like really confident and I know what I'm doing, I try to do it unserious. And if I'm testing things out or just screwing around, I put on experiment. So if I took a trade in ES, you know, I don't trust my trades in ES whatsoever. I really think that most of the time when I'm taking a trade in ES that I'm mostly taking shot in the dark. Like, even if I think I know something that's going to predict the future flows, like we're going to be up or down, the chances of something, you know, there being a temporary dip before that happens or anything is just too high. I can't make a really accurate order placement over there. So. Omar says I moved to the bonds lately. I really think that there is just more opportunity for a retail trader to develop edge in the treasuries than the other instruments. Like, because equity indexes, I feel like most of what goes on over there is random. When you get into gold, I just, how would you predict the flows over there in gold? Gold kind of is like a less bad of cryptocurrency, where you just kind of trying to predict what speculators are going to do, and that's hard. Oil is probably the second best place, but it's harder. It's harder to develop that edge in oil than it is in the treasuries. Like, you really got to become an expert at it. And then, you know, some of the other ones like corn and copper, like, you really need an inside track. Like, how are you going to develop that expertise? You know? So, treasuries kind of becomes the place where, like, the resources for you to learn about what's going on and everything are the most available online for treasuries. So, that's why I kind of recommend people to go there. But everybody goes to equity indexes where it's probably mostly just random. Anyways, I need to blow my nose because it is tickling me, and it's time to go anyways. So I will see you guys tomorrow. In the meantime, stay excellent, team.